don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD, Annabelle, and Melissa.
Hey guys, welcome to the Real Estate Jam podcast. I'm JD with my marvelous co-host, Melissa. Melissa, how are you today?
I'm doing super. Thanks for asking.
Good. I'm really glad. Hey, we got
excited about Edwin being here.
Yeah, this is going to be a great podcast, especially for anybody who is interested in private money or has extra funds in their retirement accounts that they don't know how to access and haven't really heard this stuff before. I think this is going to be great. But so we have Mr. Edwin Kelly on here. He's the CEO and founder of Specialized Trust Company. He's one of our nation's leading experts in the self-directed retirement account space. He's a public speaker, and we're super lucky to have you on the show today. Edwin, thank you so much for joining us.
Hey, JD and Melissa, it is awesome being with you guys. I've been looking forward to this for a while, and since right, Melissa, you're a client. I mean, I always love connecting with my clients, so that makes it even better.
Yeah, well, so I met Amanda. JD and I met Amanda a couple years ago, and man, the stuff that she taught us, I had no idea that you could direct the IRAs like that. I thought you were just like kind of stuck with it. So I would love if you shared that kind of information with our audience.
Yeah, there's a lot of misconceptions out there. And so I'm happy to kind of clear the air on this topic.
Perfect.
Awesome. Well, to get started, Edwin, if you wouldn't mind kind of introducing yourself to our audience and letting them know kind of who you are, and then we'll just see how we can provide some value to them.
Sure. So my name is Edwin Kelly. I'm CEO and founder of Specialized Trust Company, as JD said. And I'll say that my financial experience began way back when I was in sixth grade. And so I'm going to go back in time a little bit. This is going to be the short, condensed version of the story. But when I was in sixth grade, I remember showing up to the grocery store with my mother. And my mother was a single mom, right, raising me and my sister. And she didn't have a lot of money. She was a social worker, so she didn't make a lot of money. And when we would go to the grocery store, I remember her saying under her breath when we get to the checkout line, wow, I hope this check clears, right? I hope I have enough money to cover the groceries. And I just remember in sixth grade, like, gosh, that's got to be an awful feeling to not know if you can buy groceries for your kids. And so that made a big impression on me. And I decided from that moment on that I was going to be successful in life and with money so that when I had kids, I didn't have to have those same worries. Now, I didn't know what to do because she obviously didn't know how to teach that stuff to me. And so that really began my financial education, but I knew money had something to do with it, right? So in sixth grade, I started doing odd jobs and I would do anything that anybody would pay me to do. I saved that money. And by the time I got into middle school, I opened up an UGMA account, which was my very first brokerage account, and made my very first investment. I bought a stock in the stock market and it doubled in a year. And like a lot of people, I was hooked on investing because let me tell you what, I made more money in 1 year investing than I did a whole year working crap jobs, right? So I learned at a very early age that wealth was created in investing. But here was the problem. A year later, right, I wanted to sell that stock because I had doubled my money on it. And my grandfather, who was the custodian for my account at the time, said, no, stocks are for the long run, right? That's what we all hear. So that stock that I bought for $18.25 a share went to $42 a share. The company filed bankruptcy and it went to zero. So it was a total loss, right? Now, when you're in middle school, that's what we call a recoverable loss, right? You can recover from that. But when you're 60 years old, or you're 65 or 50 even, right? That's an unrecoverable loss for many people, and that's a challenge. And so that was another lesson I learned. I learned that if you don't have control over your money, then you don't actually have any wealth that you can count on long term. And so that's where I started looking at, well, how do you get the most control over your money? And that's where I discovered self-directing, and specifically self-directed retirement accounts, because that is the place that I learned I could control the taxes. I could control what I put my money into, right? It didn't have to be stocks and mutual funds. And I could also control my assets from creditors. So all of a sudden, by using the right kind of vehicles to build wealth, I had complete control over my money. And that was life-changing for me. And that's why I got into it. And I've been doing it for over 20 years now.
Yeah, it's amazing. And I think that the reason that I got into real estate investing was because I wanted that control, and control for me on my assets is probably my number one concern. And that's the thing that means the most to me as an individual. But I also see it as being valuable, not just because, I'm a control freak and want to be in control of it, but also because nobody's going to take responsibility for your financial future better than you will.
Yeah. And, that's what I tell people all the time. I say, look, nobody cares more about your money than you. Mm-hmm. So for better or worse, you've got to take control of it, right? That's the most important and most beneficial thing you can do for yourself, to make that mental shift that you're going to take control of your financial life, complete control over it.
So I guess then the direction that I would go is, can you kind of explain the difference between your self-directed stuff and your in the traditional accounts, and then how we can apply that to real estate investing, for example, or any of those other benefits of the self-directed,
like purchasing the property?
Yeah. So good question. So for a lot of people, because like you said, they're not familiar with this topic. What is a self-directed IRA? So I put IRAs, or retirement accounts, and I use oftentimes in podcasts and interviews like this, I'll use the term IRA as a general term, as a placeholder for all accounts. Mm-hmm. Okay. But there's different types of accounts out there. So I call them plain vanilla IRAs versus self-directed IRAs. So what's a plain vanilla IRA? A plain vanilla IRA, or retirement account, is one that most people have, and is one that you get from a traditional bank or brokerage house or financial institution. And the reason why I call that a plain vanilla IRA is because those financial institutions limit or restrict investments to what we call marketable securities, things that they can earn a fee or a commission on. So for example, stocks, bonds, mutual funds, and CDs. Those are marketable securities. That's what most people think they can invest their IRA in, because that's all the options that they are given. But the reality is, when the government wrote the rule book, right, there's all kinds of things we can do. And that's what, by contrast, I call a self-directed retirement account. So a self-directed retirement account is one that allows you, as the IRA owner, right, as your IRA, to invest in anything that the government allows. Okay. So things like real estate. So if you can buy real estate outside your IRA, guess what? You can buy real estate inside your IRA. If you can lend money on an investment outside your IRA, you can lend money from inside your IRA. If you could buy cryptocurrency outside your IRA, you could buy cryptocurrency inside your IRA, right? So essentially, right, it's one where you have control, and that you can invest in things that you know or understand better and have more control over. So that's really the difference between a self-directed IRA and a plain vanilla IRA.
Okay. And how have you seen real estate investors use the self-directed IRA? Are you seeing them purchasing properties? Are you seeing them lend it to other people? What does that look like? Because I think our audience is interested in real estate, or at least I hope they are, and how that would apply to them.
Yeah, so there's two ways. So there's two different approaches to using self-directed accounts. So one way is that we can build wealth by doing our own investments inside of our own account, right? And that's the first way. So when we look at that aspect of it, the two most common things that we see people invest in are real estate transactions and notes or mortgages. Those are the two top asset classes that we hold at Specialized that we see clients investing in. So when it comes to real estate, we have clients investing in single family homes, like buy and hold, right? We have clients who will buy into syndications, say in apartment complexes or commercial properties. We have clients who will buy tax liens, which it's a real estate play in my opinion, right? I mean, so I'm going to put that in the real estate category, even though it's a tax lien certificate, it's not an actual piece of real estate. People will do assignments, right? I'll tell you a great strategy when it's appropriate are subject to deals inside of a retirement account, right? You don't need a lot of cash to control a sizable asset that can spin off a lot of long-term great cash flow for you. So those are some examples of like real estate transactions that we process every day inside these accounts. Now, on the other side, like I said, there's a lot of investors and there's a lot of folks out there who maybe they don't have the time to go find the deals or to do the marketing, or that's just not their area of interest. But they understand that real estate is a good investment and it's a way to secure their money. And so they want to participate. So that's the second large category of investments that we see at Specialized, which is notes, mortgages, deeds of trusts, right? So the retirement account will lend money to an investor or on an investment in that particular scenario, right? So that's when somebody's creating wealth in their own account. Now, we could look at it from the other side too. Investors, right, particularly real estate investors who are doing creative type of investment transactions, right? The banks typically don't finance those. So private funding or private money is one of the best sources of capital out there. And so that's the other way that you could think about using self-directed retirement accounts, which is, it has nothing to do with your own account. It has to do with using other people's accounts to act as the bank to fund your investments or participate in your investments. And so we see quite a bit of that happening, and that's where most of those notes are coming from.
Yeah, I think that's what most interests me is being able to find people who maybe have some sort of IRA that they got at one job that was a traditional IRA. Now they've left that job and they have this fund that's sitting there. They can transfer that money into a self-directed IRA and then lend it out to or any of the things that we've already talked about. Is that right? Or that's your understanding as well?
Correct. So we see a lot of that, particularly lately. So I'll give you just, a quick example. So if you're watching this right now and you have your money in an IRA in say the stock market via a mutual fund or something else, let me give you a perspective on what things look like, what that landscape looks like right now in February of 2021. So JD, let me ask you a question. If I offered you an investment opportunity and I said, look, there's an investment that will pay you $100 this year. It will cost you $100,000 to buy into that investment. Are you interested in buying into an investment for $100,000 that will give you $100 back this year?
I am not.
Yeah. So
I'm sorry.
Here's the reality of it. If you have money in the stock market, that's what you're doing. Because there's something called a PE ratio, right? And in December, Tesla hit a PE ratio of 1,000. What does that mean? What that means is that for every $100,000 you put into that, you could expect $100 back in earnings. Okay. The reason why I use that as an example is because Tesla is held by every S&P 500 fund out there, right? It is held in a lot of large cap mutual funds. If you own large cap, if you own the S&P, you own investments that are like that. So think about that. What's the likelihood that that money is going to make you a lot of money, right? I mean, to me, that's a pretty risky investment because I would never make that investment.
Right. No.
So here's the reality of it. People get that, right? People are feeling that. That's one reason why we actually opened up 40% more accounts last year than we did the year before. 40% more. Because even though the market's gone up, people are saying, look, this doesn't make any sense to me. This makes me really nervous. I need to diversify. So now think about it. By contrast, a person can take their money, transfer it into a self-directed retirement account, invest it, like you said, lend it to an investor, and you negotiate the terms. You can secure your downside, right, with the property being the collateral. You can negotiate and agree to a fixed rate of return if that's how you choose to do those types of transactions, and you figure out what works for the transaction, you as the investor, as well as the person who's lending the money. It's a win-win all the way around. And so it's a great diversification tool, but we're seeing a lot of people move more and more money from the stock market, believe it or not, even with it going up, to self-directed accounts to participate and fund other people's investments because the returns are just, long-term, they look more favorable.
And just so, because I know that before I heard Amanda speak, I wasn't really savvy on this. So, but then when the money comes back, like in a form of a payment, it has to go back in there, correct?
So that's a good question. So a lot of people think that self-directing is complicated. Self-directing retirement account is complicated. It's actually pretty simple, right? There's effectively 3 steps to self-directing your retirement account. So step number 1 is that you decide that you want to have control over your money, you want to have control over your destiny, and you want to have control over your future. The moment you decide that, you establish a self-directed account, right? So that takes all of 10 to 15 minutes, right? You do that online effectively, and now you've got an account, step 1. Step 2 in the process is that you deposit money in that account. So one way to deposit money is to make a contribution, right? You earn money this year, you can write a check and make a contribution. The way that a lot of people are funding these accounts are with transfers, right? From old 401ks or IRAs at other institutions, and you can transfer that money into a self-directed IRA. You can transfer all of it. You can transfer some of it. In fact, that's a strategy we see a lot of clients doing right now. If they're up in the stock market and they say, you know what, I don't want to take all my money out because it's going up, they might take half of it and transfer it over, and then leave the other half where it's at. You can do that. That's called a partial transfer. So now you've deposited some money in the account. That's step number 2. The third and final step is that you now direct, hence the term, right? Self-directed. You direct where you want your money to go and what it's going to be invested in. So in the event, Melissa, that you used, the example, you create the note, right? So the note, the client sends the note in, the cash goes out for the investment. And then what happens is, if you're the investor, right, when you pay all, whether you make interest payments on a regular basis or it's a balloon note, right, you just pay it at the end with the interest, then right, so the money comes from the account, the money returns to the account. By the way, because that all happens in the account, the beautiful part about that is you just protected 100% of your earnings from taxes. So you owe 0 taxes on the return, right? And so that's really appealing to people, and it's a great thing to do.
Yes, that's so awesome. I love that part of it.
Yeah, it is. I guess which leads me to my next question is, I know that there are mandatory withdrawals from some of these other retirement accounts at a certain point. You have to start taking money from that. Do those type of rules apply to the self-directed space? And then if you have an asset, a physical asset like a house owned by your self-directed IRA, what happens when you have to receive payments or take money out of it, or what does that look like?
Yeah, great question, JD. So there's a few things in there to unpack. So the first thing is it depends on the account. So some accounts you have to take what's called an RMD. That's what you're referring to there, required minimum distribution, which happens. It's traditionally been 70.5. They're increasing the age on that a little bit, by a couple of years. So, but that's only on certain accounts. Other accounts, you don't have to take an RMD. So the answer is it depends on which account you have. If you don't want to take RMDs, then that's where we can help you kind of talk through that and come up with a strategy to where you're in the right kind of account so you don't take those RMDs. So that's one side of it. The second part that you asked about is, well, what happens if you own a property in there and you have to take money out? Or if you just want to take money out, right? It could be either way. So there's kind of two answers to that, and that is, well, what's the goal? So let me give you an example. If you own a rental property and it's spinning off monthly cash flow, what you're spending is the cash flow, right? So even though you might have an RMD, typically your cash flow is going to be much higher than what your RMD is. So you're going to leave the property in there and it's going to continue to spin off, tax protected cash flow in the account. But like I said, it also depends on the strategy. So one of the rules with self-directing your retirement account is that you're not allowed to use any asset owned by your retirement account. And the rule says present or future. But this is where it pays to work with somebody like who understands these things, who can help you map out the strategy and do this. So I had a client several years ago who said, here's the thing. I want to buy a condo on the beach in Florida, right? I want to run it out to snowbirds. And eventually, when I stop working, I want to be able to retire and live in it. Okay, so client bought the condo inside of a Roth IRA. So a Roth IRA is one where when you take money out of it, so long as it's referred to as a qualified distribution, you pay no taxes, no income tax, no capital gains tax, no taxes at all, right? So the money comes out. So he bought this in his Roth, rented it out to snowbirds, so it generated income back to his retirement account. Then when he decided he was ready to live there, he didn't want to distribute cash from his account. He wanted to distribute the asset, which is, you can distribute cash is an asset. Real estate is an asset. So we distributed the condo to him, which means we retitle it from the IRA to his personal name. Because it came from a Roth, that's a tax-free event.
Wow.
So now he's able to live in it. So again, to come back to answer your question, JD, it depends on the strategy, right? You tell me what you want to accomplish. I can usually figure out how to map it out for you.
Yeah, no, that makes a lot of sense and actually clarified a lot. And I guess that's the reason that you would not be looking to do this by yourself. You'd be looking to hire professionals and go down that route.
Correct. Well, and by the way, one of the things that makes a self-directed IRA is the financial institution that holds it. So the financial institution who provides retirement accounts or financial services, they're allowed to put into place, right, what the rules. They can't go beyond the government's rules, but they're allowed to restrict the rules. So that's why you see a lot of banks and brokerages that say, we only hold stocks, bonds, mutual funds, and CDs, right? They have the right to put those restrictions on, even though the government allows us to do many more things.
Edwin, okay, so if I had my great aunt Ethel and she has a Roth account or some other sort of retirement account, but she's considering investing with me, where would I direct her, or where could I point her in the direction, or where could I take her to show her the information that she's going to need to be able to make an informed decision about making that transfer to the self-directed space? Yeah, so
our website has a lot of great information on it. And that's probably one of the best ways to get started. So at our website, which is specializedtrustcompany.com, we have a blog, so we have lots of great information and articles. But one of the things that we also do, and it's a completely free offer, because people do have questions about how this works and their specific scenario, right? Their situation. And so one of the things that we offer is my most recent book that I've written. I've written a few, but my most recent book that I just published which is called The Roadmap to Financial Freedom. It's on our website. That book is available for free. So someone can go to our website and get that for free, and also sign up for a strategy session with with one of our self-directed specialists. And that's 100% free to folks right now. We're waiving all the fees associated with that. So that's a good way to get some additional information and find out more and get specific scenario questions answered.
Great. And if people wanted to find out more information about you and the company, that's where you would send them? Or do you want me to?
SpecializedTrustCompany.com. Yeah, no, that's the best place to go is just SpecializedTrustCompany.com.
Okay.
Like I said, on our webpage, there's a form there. You fill it out, you submit it, and then we'll send you the book and get that strategy session scheduled with you.
Awesome. Well, we really appreciate you taking the time to speak with us today. And I'm sure that there's a ton of value that people are going to get out of that and out of this conversation. I know that I learned a bunch of stuff that I didn't know before. Awesome. This is definitely the direction that we're trying to move as far as bringing on our private money lenders, because there's a lot of people that have retirement accounts but don't know what else they can do with them. So we appreciate all your knowledge.
Yes. Thank you so much, Edwin.
Well, thank you guys for having me.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.